Question number 10A. Vishesh, Manik and Amit were partners in a firm, sharing profit and losses in the ratio of 5:4:1. Partner Vishesh, Manik and Amit. Their profit share ratio is called old profit share ratio 5, 4, 1. 5 plus 4 plus 1, 9, 10. 5/10, 4/10, 1/10. Clear? Next, Amit retired on 31st March 2024. Amit retired. Vishesh and Manik acquired Amit's share in the ratio of 2:3. Here, Gini ratio is available. Sacrificing PSR, that is 1/10 of Amit's share, and Gini ratio 1/10 into 2/5. This 1/10 is distributed or divided between Vishesh and Manik at the rate of 2:3. So 1/10 into 2/5. Similar for Manik, 1/10 into 3/5. Clear? Now equal to 2 divided by 50. Here equal to 3 divided by 50. So above base is 10 and gaining and sacrificing ratio base is 50. Therefore we multiply simple 5/5. Any number into 1 equal to same number, equal to 25/50 into 5/5 equal to 20/50 into 5/5 equal to 5/50. Otherwise, here we will write into 5/5. So 1/10 here base is 10. Simply multiply 5/5 equal to minus 5/50. Now, the new preference ratio between Vishesh, Manik and after Amit's retirement will be new ratio 25/50. Now added gaining is 2/50. So it is 27/50. Manik 20/50 plus 3/50, 23/50. 5/50 minus 5/50, 0/50. Therefore, the new ratio equal to 27:23. Available point number D. Next. Varsha, Aryan and Nimit were partners in a firm sharing profit and losses in the ratio of 2:2:1. Partner Varsha, Aryan, Nimit. All preference ratio equal to 2:2:1. This is 2/5, 2/5, 1/5. Varsha retired and surrendered 1/3 of the upper share in favor of Aryan and the remaining share in favor of Nimit. From this sentence we got total is 1 we know. Out of 1, 1/3 if is favor of Aryan. So balance 2/3 in favor of Nimit. Varsha retired. Sacrifice ratio 2/5. So goes to Aryan Gini ratio 2/5 into 1/3 and Nimit 2/5 into 2/3. That is 2/15, 4/15 for Nimit. So base is 15 and all is 5. Therefore, into 3/3 equal to 6/15 into 3/3 equal to 6/15 into 3/3 equal to 3/15. And here 2/15, so base into 2/5 into 3/3 equal to 6/15. So difference, the new profit sharing ratio between Aryan and Nimit will be difference or new ratio equal to 6/15 minus 6/15, 0/15. 6/15 it is gaining. There was 6/15 plus 2/15 equal to 8/15. And for Nimit 3/15 plus 4/15 equal to 7/15. Ratio is 8:7. Available point number B. 11. When the partner's capital are fixed, the drawings made by the partner are recorded in the current account. Journal entry, partner's current account debited to drawings account. Answer C. Debit side of the partner's current account. 12. 4,000 share of rupees 10 each were forfeited for non-payment of the second and final call money of rupees 2 per share. From this sentence we got number of share forfeited equal to 4,000 shares. Face value per share equal to 10. Call in arrear, that is second and final call rupees 2. The minimum amount that the company must collect at the time of reissue of these shares will be Minimum amount collected at the time of reissue equal to number of share forfeited into call of capital per share not received. Call of capital per share not received equal to 4,000 into rupees 2 equal to 8,000. Clear? Otherwise, rupees 2 is second and final call money not received, that call. Another one formula, number share forfeited into amount issue at the time forfeiture minus amount minus forfeiture amount. You may take minus forfeiture amount. That is the minimum amount. What is the formula? Number of share forfeited into bracket call of capital per share at the time of reissue minus forfeiture amount. So it is available in point number A. Next 13. On 1st April 2023, Bhibu Limited issued 20,000 13% debenture of rupees 100 each at a discount of 10%, renewal at premium of 5% after 4 years. So number of 13% debenture equal to 20,000 debentures. Face value per debenture equal to 10. Discount on issue of debenture equal to 10%, that is 10. 10% on 100, that is 10. Premium redemption after 4 years equal to 5% on 100, that is rupees 5. Total amount of interest on debenture for the year ending 31st March 2024 will be interest on debenture equal to number of debenture into face value per debenture into rate of interest equal to number of debenture 20,000, face value per debenture equal to 100 into rate of interest 13 by 100. 100 cancel. 13 into 2 26. Therefore 2,60,000. Available in point number B. Question number 14. Arushi, Biban and Mitali are a partner in a firm. Partner Arushi, Biban and Mitali. On 31st March 2024, the firm was dissolved. Dissolution of the firm. On that date, the firm had debtor rupees 60,000 and provision for doubtful debt rupees 3,000 were existing in the books. Debtor amount available 60,000, that is book value, and provision for doubtful debt available rupees 3,000 is also book value. Provision for doubtful debt is deducted from debtor. Otherwise, so in the liability side. Debtor rupees 8,000 proved bad and full amount was released from the remaining debtor. So, bad debt amount equal to 8,000 that will not receive. When bad debt available, provision for doubtful debt is not countable, or provision for doubtful debt normally is not countable at the time of dissolution. Bad debt rupees 8,000. The amount realized from debtor. Amount realized from debtor equal to debtor amount minus bad debt. Debtor amount equal to 60,000 minus bad debt equal to 8,000 equal to 52,000. It is available in bit C. Question number 15. Asmit, Bina and Rohan were partners in a firm, sharing profit and losses in the ratio of 3:2:1. Partner Asmit, Bina and Rohan. All profit share ratio 3:2:1, 3/6, 2/6, 1/6. Bina retired on 31st March 2024. Bina retired on 31st March 2024. The capital accounts of Asmit, Bina and Rohan showed a credit balance of rupees 2 lakh, 1 lakh 8,000 and 1 lakh 20,000 respectively after making all adjustments relating to the revaluation, goodwill, reserve, etc. So capital accounts after all adjustment, Asmit 2 lakh, Bina 1 lakh 80,000, Rohan 1 lakh 20,000. Therefore, 2 lakh plus 1 lakh 80 plus 1 lakh 20,000 equal to 2, 3, 4, 80, 21, 5 lakh. Bina was paid in cash brought in by Asmit and Rohan. Amount paid to Bina in cash, that amount Asmit and Rohan brought. in such a way that their capital were in proportion to their new property ratio. So new preferred share ratio equal to 3:1. In the absence of information, old ratio equal to new ratio. So 3:1, that is 3/4, 1/4. The new capital of Smith and Rowan will be new capital, that is 5 lakh rupees, 5 lakh by 4, 1 lakh 25 into 3, that is 3 lakh 75,000, and 5 lakh by 4, 1 lakh 25 into 1, 1 lakh 25,000. Here Smith's capital 3 lakh 75 and Rowan's capital 1 lakh 25. Answer is A. Question number 16. Nita, Bidur and Mita were partners in a farm sharing profit and losses in the ratio of 3:4:1. Partner Nita, Bidur, Mita, all profit share ratio 3:4:1. 3 plus 4, 7 plus 1, 8, 3/8, 4/8, 1/8. On 1st April 2024, they decided to admit Samir as new partner. Samir as new partner. The new proportional ratio between Nita, Bidur, Mita and Samir will be 1:1:1:1. New proportional ratio 1:1:1:1, 1/4, 1/4, 1/4, 1/4. The balance sheet of Nita, Bidur and Mita before Samir's admission showed machinery rupees 6 lakh. Book value of machinery rupees 6 lakh before admission of Samir. On the date of admission, it was found that the machinery is overvalued by 20%. Overvalued means 100 instead of 100, we are writing 120. So machinery is overvalued by 20%. The value of machinery shown in the new balance sheet after Samir's admission will be machinery in new balance sheet equal to 6 lakh divided by 100 plus 20 overvalue into 100 equal to 6 lakh divided by 120 into 100. Cancel 120 into 5. So it is 5,000 into 100. That is 5 lakh. Available answer is part number D.